Hello and welcome to Your Money, Your Call. I'm Roger Montgomery from rogermontgomery.com. It is quite interesting, isn't it? I don't think, maybe you can help me out here, I can't identify a point in history where there hasn't been geopolitical concerns, where there hasn't been surprise earnings results, where there hasn't been freak weather events and all kinds of things to make investors either very greedy or very fearful. So perhaps, is that why your message never changes?
Look, one of the things, when you go to university, and I studied economics and commerce, you get a couple of free subjects, really, where you can go and actually basically go and do what you like. Yeah, correct.
You're at New South Wales?
I took philosophy,
right.
And I remember one of the things I learned. One of the probably things that has stuck with me. One of the Greek philosophers, and I can't remember which one it was, said, "This too will pass." So whatever you're looking at and whatever you're worried about, ultimately it'll go away, and we'll be on to the next concern. Having said that, though, the issue in the Middle East, it won't end quickly, and that is because revolutions are much like dominoes. If you study your history, they tend to spread, they tend to topple other regimes, and I've been on the program when Egypt, the uprising in Egypt occurred, and I said this wouldn't be the last. Then we've got Libya now, but there's also Algeria to worry about, Morocco to worry about, Jordan potentially to worry about, and if it really catches on and gains momentum, the Chinese could be an issue.
Really? Yeah. Well,
one of the things that governments can't do is they can't stop this type of inflation. So the massive weather changes that we're seeing are causing is one reason why we're seeing food prices rise so spectacularly, and you're seeing futures markets for wheat and soybean and corn and all those products.
Climatic shifts here.
Yeah, that's right. Yeah. And so you've got, for example, in the winter wheat growing of the winter wheat growing area of the United States in Kansas, shocking crop devastation over there. In China, where they grow their wheat, 90% lower rainfall than what they had last year. We've got a big freeze-on still in Europe. I've got friends who are in Sweden, and it's minus 16 or minus 20 degrees there still. It's really, really cold. We've had huge floods and cyclones in Australia, and the result of all of that is high food prices. Less reliable food growth patterns, and so companies that are involved in, for example, irrigation, they're going to do reasonably well, I think, in the future. Companies that are involved in fertiliser, they're going to do really well. Companies that are able to manufacture greater yields for crops, they're going to be the sorts of businesses we're going to need more of. So there are implications for investors based on what's happening. And can I just say one more thing, which is really interesting, is there's some research coming out of, I think it's Denmark at the moment, and it's something that I'm only curiously interested in. I don't know a lot about it, but the idea that every 500,000 years or thereabouts in the world, we get a magnetic shift, a magnetic reversal.
Yeah.
The North Pole, the magnetic north, has been shifting towards Russia at a rate of 5 to 10 kilometres a year for the last 50 years. But in the last 10 years, half of that movement has occurred. Over the last 50, half of it's occurred in the last 10, and it's currently moving at about 50 kilometres a year. So there's some that believe that the wild weather that we're seeing is due to that. Now, I don't know if that's true, and I'm sure there are people who are watching who know more about weather than I do, but that's one view, and that's something to be mindful of.
Sure.
Thank you for taking the call. Now, I've got a question about Pacific Brands, PBG. Now, they had their half-yearly results released today, and I just had a quick skim through, and it didn't actually seem as bad as the price turned out to be. It got slammed about 12 or 13%. Well, they've recently going to pay a new dividend again after a couple of years, which is a bright sign, but yet the market didn't like it. I just want to know whether there is some value left in the company or whether this is just a complete dog like the market's treating it to be.
Really good question. Yeah, really.
I can tell you that the growth prospects for its intrinsic value aren't fantastic. I've got its intrinsic value rising at circa 10% for the next few years, which is mediocre. You know, there are businesses out there whose intrinsic value should grow at sort of 20–30%, and it's trading at a little premium to its intrinsic value as well. So for me, it doesn't strike me as a business that I need to worry about right now. I'd prefer to be buying something else.
Even optimistic when you look at some of those things.
Well, the big thing, I think one of the things that return on equity perhaps misses is that they've been paying down their debt at a very fast rate, and in fact their debt has fallen. If you have a look at those numbers, you'll see the debt's actually fallen from $940 million back in 2007. Their debt's actually fallen to $462 million. So they've had a near halving.
I'd take that point in absolute terms, but in terms of their debt to equity level, I mean, still, it's, you know, again, it's not uncomfortably high, but relative to the size of the business, you know, it's
22% is not too bad on a net debt to equity basis.
Sure. You're right.
Look, I think there are better quality businesses trading at smaller premiums to their intrinsic value than Pacific Brands.
Good to have you on board, Gail.
Oh, hello. Yes, how are you?
Good, thank you. How can we help you today?
Look, I was just wondering what the guys' thoughts were on a specky stock, Signature Metals.
Signature Metals. Do you know what they do?
It's gold.
Gold. Roger, Signature Metals.
Many of your viewers would know that when a company hasn't made a profit, it has a value of zero. So I can't really value a company that makes no money. Now, it may be that it has assets that are valuable, but until they're actually earning something, it's very hard to put a value on it. So this is the sort of business that I simply steer clear of. It's a C4, which is the second worst rating in terms of my quality spectrum. It's not a business that it's not investment grade.
How does it avoid the worst rating?
That's a great question.
I put you on the spot there.
It may be it has slightly less debt than the worst companies.
Okay, sure.
I've said this before on the program as well, that when I have a view on a commodity, I tend to buy the futures. So I tend to prefer a direct interest in the commodity's direction itself. It has nothing to do with value investing, and that's why I don't talk about it very much.
Sure.
But I've been long gold for a while, and I have an opinion that that as we transition from the United States dollar as a reserve currency and we move towards some other currency being that reserve, and my guess is that will actually be the Chinese currency, and it will be a lot quicker.
Gold will be the Chinese currency?
No, the Chinese currency will be the reserve currency.
Okay.
But in that transition and in that doubt, you know, there's never any... it's not a seamless process. Gold may actually benefit. And the other thing to remember is that funds around the world, investment funds, I think they have about 0.5% of their entire assets invested in gold. If that were to double, then that would mean approximately 10 years production of gold demanded. That could be very positive for the gold price. Again,
it depends over what frame it doubles.
It is speculative, and I'm doing it as a hedge against inflation, which is the same reason that I'm also and have also been short US 10-year T-notes for some time now, and both of those positions have been profitable. I don't know whether the profitability of those positions will continue. Of course, I'm no good at predicting where these things are going to go.
No one is.
But I'm taking positions based on those views.
They're going to give you a pile of cash and some tax credits every 6 months.
Yes, that's true. But it's also true that you can have too much of those things, and you've got cash flow, and you need to do something with that cash.
Okay.
And so if the opportunity is there, then it provides some diversification benefits as well. You're absolutely right. You buy a company with a great franchise, great return on equity, and that can retain it and employ it at very high rates, you'll do well.
Yeah.
That's what I do. But a few futures contracts in gold has also been helpful.
Sure.
Australia's Business Channel.